Hey guys, hope you're having an amazing day. In today's analysis, we're going to be taking a look at gold, US oil, and Bitcoin. If the first time you're just joining us, then we're glad to have you here with us and find this content very helpful. Please like, share, and subscribe. And also, if you would like to learn how to trade or make analysis like this as a professional Forex trader, then we encourage you to subscribe to our membership platform at nfxhub.com. All the links are going to be in the description below. And at the end of this video, please share your thoughts in the comment section, or you can interact with us on our Discord platform. Alright guys, let's get on chat. Here on our chat, we can clearly see the chart of XAU-USD, which is gold. And first, I'd like to say there's not so much difference from what we've had the last time, apart from the recent market activity which we had, which is the breakout above the trend resistance rather. So as of last year, we saw the market move, test this level multiple times. I'm gonna get the brush too. So we saw the market test the level multiple times. First, it was serving as our support level before, and then we had the breakout below, and then it became a new resistant level, which we saw here. Then we saw the first major test. We had the second major test, and the third major test, which was the last recent test. Until today, we had the breakout above this level. So that make our current resistance level fully done. So this is no more resistance level. It's now going to be acting as a support level. So what I'm watching out for is to see what happens the next following days on the markets, to see if price is going to retrace back down to test this level, because currently price is currently at a new resistance level, which is the same we have here, and this is a very key region. So I'm going to be very watchful of the market. I have no trade running right now. I already closed my long-term position, and I expect that if any of you took our last year swing trade, which was somewhere around 26.30, then you should have closed. You should have closed by now, because that trade is around about 1,500 pips. Yeah, so it's about 1,500 pips thereabout. So you should have closed this trade already by now. If you haven't, then please ensure to close the trade as soon as possible, because we don't have to wait for market to hit our target at 27.50. We may or may not see that, but I think we already have a good price, so we should take that now. So back to our analysis. So if we don't see price hit this level and reject this level, then most likely we will see price start going higher or drop down. So I expect us to see this price being rejected, but I'm not so certain about that. So that's what I'm watching out to see what the market is going to do. So if price gets to this point, we should expect some consolidation. I'll go to the lower time frame. So what we have here on our lower time frame, you see this is the level we're currently hovering around, and I expect that we should see something like this happen again here. So we see some price consolidation over and over and over again before we get any major either breakout, or we could see price return back downwards. But I'm expecting us to see, most likely I'm expecting us to see price return back downwards to test this recently broken resistance, because this was a major resistance. We had multiple tests, one, two, I count this as three, and then the initial first test was 4. So it's a very strong ideological level and a philosophical level rather. So I'm expecting us to see price retest it, just to confirm that that level really is solid, and that level is really gone. So until then, we're not taking any trade. I'm going to watch what happens in the market this week and see what happens before we take any trade position. So on the fundamental aspect, we can see Trump executive orders that was declared yesterday. Most of those orders are very strong, and they're really serious. Especially the Paris Accord that was withdrawn, and also the WHO that was withdrawn. That clearly tells you that there will be consequences. So we're not certain about what's going to happen, how the global economy is going to accept it. How they're going to respond to that. That definitely would create a lot of uncertainty in the markets. Would the European Union just let it go just like that? So all of these things are not yet clear, and all of these things, because they're not clear, it means that people are a bit skeptical about how to handle things. A lot of countries are still not certain about how the US is going to impose tariffs on businesses. So there are a few things that are just still hovering around the corner, and yesterday was just inauguration. So this week will be a very good time to observe the markets, pay attention to the details of what happened in the market, and then next week we should begin to see some clarity. So not until a full clarity of where the US is heading towards is ascertained, there will always be high risk in the market. That means that gold would like to see higher prices until this is achieved. Now, there's a good part that Trump is more pro, let's say, is anti-war. So we could say he will most likely negotiate. He's more pro negotiation. So let's say he's likely going to negotiate with Putin, as well as the Middle East to bring an halt to the war. That definitely boosts prices because it will make the global economy more open for traveling, more open for businesses. If the war in Ukraine stops, if the war in the Middle East has been easing a little bit, it will have a very massive effect on the global business, and that will definitely push the prices of the US up as well, and that would definitely as well make the price of gold come back down because when economy is good, there's no point of high gold prices start to drop. So until those things are being actualized, for now, gold is staying in a very bullish state. So I'm not looking at sell positions as well. I'm still looking at buy positions, and my stance on gold is still bullish until all these things have been actualized. So that's all for gold. These are for our charts, and like previously, these are daily charts. So like I said, let's watch at these key levels. It's more clearer here. This key level, we'll just watch here our resistance level. If this level is broken, then we look towards 2780. But if it's not broken, then we expect price to drop back to test this recently broken resistance, which is acting as a new support level at 2710. So that will be our major area of focus or area of point of focus. So that's what we're looking towards a trade, either above 2750 or at 2710. That's our entry levels. So next we're going to be looking at is US oil. So similar to gold, US oil went, it did exactly what we expected. That's what we had this ABC either to wave. So we had a clear movement of the market, a clear analysis of the market, and price went exactly as we expected. That was a great thing. So what we're seeing today is just a level of correction. After we saw price, move from the yearly support zone. Tested our 38.2 Fibonacci retracement level. We saw price test back the trend line after we broke out from this one, and let me take this one up so we get more clarity. And then we saw price that's ascending higher. So we saw price keep going higher until we got to the descending triangle, which is our long-term chart pattern. And after that, we saw a fake out. I like to call it a fake out because we saw price come back down. This level did not hold. And this week, I'm going to be watching what happens in the market. Tomorrow should be 22nd or 23rd. So I think on the 23rd, we should be expecting the next crude oil inventory stock report. The last oil report was not very good, and so it was very, very bad for crude, because we saw that we thought market expected 3.5. I'm going to make this closer so we can see clearly. So market expected 3.5 million barrel, but fortunately we saw only minus 1.962, which tells us that there was more supply of crude than anticipated. So the system is not as tight as we initially expected. That was very bad for crude. So we saw crude drop drastically. So the last report was on January 15th. That was last week, and that's exactly what we saw here. This was January 15th, right? So on January 15th, we saw price started dropping drastically. I'll just put this one here. So we saw price started dropping drastically to the lows we have today. So now market is being stored, and we're anticipating the next inventory report, which should be released. I'll see on January 23rd. That should be tomorrow, if I'm not mistaken. Yeah, today's 22nd, today's 21st. So by tomorrow, we should be expecting by next tomorrow rather, we should be expecting the release of the next US crude inventory, and that will give us a clear direction where the market is going to. But right now, on the technical aspects, we don't. There's not much to do because we just saw a breakout, and which right now looking like a fake out. If the report is still as bearish as what we have, then we could see price hit way back down to the 72.72 price level, which is our major support level. I don't think this support is going to hold, but it might hold as well, which is the 50% Fibonacci retracement level. But I'll be looking more at the 38.2% Fibonacci retracement level. And the closer we are to our yearly support zone, the better for us to get the better entry. So when that is established, then most likely we could see, price could do something like this and then go back up. This happens a lot of time. Or price could go way back down, break, go up, consolidate again, and then break out. But either way, it's going to be a long-term bullish market. But short time, for us to get a good entry, we have to wait and watch exactly what happens to the market. So if the next report turns out bullish for gold, for crude, then I'm expecting us to see, most likely today, tomorrow, so the price rotate around this level, or if it stays around, I'll get that out. So if it stays around this level, which somewhere around the trend line, it is better for us because we know technically we can easily get an entry at the breakout at 61.8 for the natural trading level, up to 76.5. That'll be our entry level. But if that doesn't happen and we see price drop back down a little bit, let me use a different color for this, and we see price drop back down a little bit, then we should expect something of this nature, and then we'll expect more consolidation, and then we'll expect a breakout. So those are the two scenarios I'm expecting, I'm looking at for in crude. Now this is the daily charts. I'm going to go to the lower time frame just to make some few things clear, and also we can take this off now because this already happened. So on the lower time frame, we can see clearly what's happening. You see price currently stored at the previous resistance level, which was rejected, and now we see price currently at this level, which as well, you know, yeah, on the lower time frame, it's clear this is also a good support level, but not really not a major support level, but a minor support level. So this might hold till the next report has been released, or it may not hold. No, this because it may or may not hold, and we'll see price drop back down. So this is the major level I'm looking at. Like I said earlier, on the higher time frame, I'm looking at this level. So if this level happens, then price will likely stall around this level, which is around the 38.2% Fibonacci retracement level, and then we will see price start going back up for higher gains. Now, you know, I think the optimism about the war coming to an end, or the visit of Saudi Arabia, then there's high hope that OPEC could, you know, see crude restore, you know, better prices in the long term this particular year, especially this particular first quarter. So that should be all for US oil and gold as well. So the last thing I'm going to be talking about today is Bitcoin, which is my favorite investment asset. So now on the macro scale, Bitcoin is still going exactly as we expect. You know, the recent inauguration just saw a pump in the Bitcoin price markets. I'm going to go first into the live chart because this is not a live chart. This is the live chart. So we can see price currently at 106k, and all these are the effects of the inauguration. And the reason is because we have, for the first time, you know, we have the presidential pro Bitcoin president, you know. So we can see that from the entire presidential candidate is what's called is candidates for the finances or financial control, financial and security aspect. Then it's all Bitcoin friendly. You know, we have Bitcoin friendly SEC, we have Bitcoin friendly advisors, Bitcoin friendly Congress. So all of these are pro for us, and we're expecting to see higher prices over time because of this nature, or because of these expectations. And the market is clearly showing us, you know, it's happy with the new setup, and that's why we see price already trying to break out from the previous level. So what I'm expecting from the daily is to see Bitcoin break freely above our last, you know, our last highs, which is that's just, I'll take a rectangle for this one. Where is that too? Yeah, now should be in my drawing, but yeah. So now I'm expecting to see, you know, price around this range from this high to this low. I'm expecting to see what happens when they clear breakout above this level, which would give us price above 110k would be a good entry for a long-term trade. So a break above 110k, that will be out of our resistance, our resistance zone, and then we can now see price, you know, expect to see price go higher towards. I get just 1 second. Get this. Yeah, we could see price break. When price break above this 110k zone, we could see price starts, you know, heading towards the 150k. This will be our next resistance zone and our next major TP. So for now, we still don't have any trade running. We'll just have to wait and watch and see what happens when price breaks 110k level. So this will be our entry points, somewhat around 111k, and then we'll set the target. This will be a swing trade to be a target for 150k. So right now we still have no trade open. We're still watching the market, and we're still expecting to see some consolidation or some stalls in the market. But I think this first quarter we should see a lot of things happen towards end of February or March. We should be seeing at least 150k BTC price. So guys, that's the major thing for Bitcoin. Yeah, on a macro scale, we can see price to here. We're still expecting price to go head higher for 150k by February, March. But for now, we have no trade running. So that's all for today's analysis. Like I said, no trade running on gold or US oil or Bitcoin. On our last trade on gold, if you still have your swing trade open, please close your trade. 27.45 is a good price. That's almost about 500 pips. That's a good trade already. Don't hold the swing for too long already. That's already almost a month now. So if you have a trade on US oil, then please ensure that you're very careful. But for now, we have no trade. Officially, we have no trade in our platform for US oil, and I'm waiting and watching until the clear dynamics plays out before I'll take any trade. And as well on Bitcoin, I have no trade running. I'm just watching the market until we have a clear break above 110k before I will take any trade. Alright guys, that's all for today's analysis. Like I said, if you find this content helpful, please like, share, and subscribe. And please join our Discord platform, and also subscribe to our membership platform if you want to learn how to trade like this. Alright guys, cheers.